Can you guys hear me? Type in chat if you guys can say, or if you guys can hear me. No? You guys can't hear me? Yeah? Okay. Perfect. Sounds good. Quality's good. Oh, nice. You got some good chats. No volume? No, we can hear it. Audio good. It's working. I say everyone says yes. All right. Let's oh, I did fix my no, I'm actually using a headset. I'm using a headset just for this. I don't want to take any chances with my stupid mic. Uh back at yes, this will be recorded because I think once it's automatically live on no volume. Um it should be good. It should be good. Okay. All right. You guys can see this screen, right? The flow screen. Just want to make sure. I haven't done like a live stream in a long time on like YouTube, so I just want to make sure everything looks good. Um, it's good. Perfect. All right. So we did a spaces last week, and we kind of got a little carried away with the flow. There was just a lot of questions I went over, and we didn't really talk about the notable flow. So what I'm gonna do is I'm gonna run through flow, see what I like for tomorrow, and I want to actually create a filter with you guys and kind of show you the type of different strategies that we can use, uh, for the market going forward. So let me talk about the flow, what I'm liking. We talk about the charts, and at the end we'll go through questions because I don't want to ask a question or answer a question and then we gotta get carried away of like what does the green bar mean? What does the red bar mean? I don't want to get into that anymore. Like I feel like I'm gonna explain it as I'm looking at the flow. So all right, well let's get started. So first and foremost, I have like let's say 8 filters. I was like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, maybe even like 13, almost 13 filters open, right? With different types of parameters. And I'll talk about it. So like this Keon's watch list is just very basic flow. So really anything that comes into the market with over 10,000 in premium because you kind of get these small cap what's it called, like $5 stocks that gets this random flow. You don't want to miss it, and and sometimes they hit, right? So this is a very basic flow. Then I have another flow talking about 75K premium plus and 180 days of expiration at the mask or at the max, not mask. Um, and then these are just specifically at the ask. I think my setting on this one is 40,000 and above. But these are specifically at the ask. So I don't want any bids. I don't want any mid price. I just want a clean ask. But that doesn't necessarily mean that every single one of these orders is going to be actually at the ask because the fills could be, the spread could be very wide. Like for example, right here, 0.18 to 0.65 spot price at 0.58. Is that really at the ask? It is closer to the ask, but it's not fully at the ask, right? So you have to actually go in and see if, let's say the IV is going up, the stock price is going up or down, and the fills of each contract, right? So and a lot of these contracts could be might not have a lot of volume either. So you gotta be careful with if it says at the ask or at the bid. You always have to double check. And then we have the ETF flow that I have specifically for put selling, and we'll talk about some that came in, and so on and so forth. So I will have a lot of filters going on, and I kind of want to talk about Yeah, so I'm gonna go over filter settings and I'm gonna create one with you guys. Okay, so I'm gonna just let's run through the flow. I'm gonna talk about the flow that I like, and then once we got that down, I'm gonna make a filter, you guys, and explain to you what I like to see. Um, okay, so with that being said, let's get this started. So one, let's here. Okay, so the first notable flow that we're gonna talk about. The thing is that the market is just headline after headline and headline headline, right? This is a base hit type market. Um, I hear a lot of, hey, what's the price target on this? What's the price target on this? What is the whale still holding? Is the whale not holding? Um, you got to, if you're in profits with a contract, just take your profits. Like this market, you can be on a nice trend, and next thing you know, there's a headline, and boom, it just knocks down your profits. So, um, if the whale is still holding the contracts, that doesn't mean you should. I have seen a lot of times that these whales do not sell their contracts or profits, and they'll just let it go to zero, right? So, yeah. So the first notable flow, as I'm looking at, is an SPX 5000 put being sold to open that expires a 7/8 expiration. There's over 4,000 in volume, 2.3 million in premium, at an average cost of 5.51 contract size. So I don't want to be a dead horse and or like a broken record, but we can see that it's at the bid because of this red bar. Okay, so basically their goal for this is obviously SPX to not get as close as possible to 5,000, right? This is a very bullish bet. Okay, can they be right? Yes. Can they be wrong? Yes. But this is what we're seeing. Also, I have no idea what the thesis behind this trade is, right? It could be a hedge. It could be someone in their backyard with a laptop placing this order that just thinks that the market is going to rip. This can be an insider trade. We don't know, right? So if you see orders like this and people say, "Oh, it's 100% a hedge." How do you know that? You have the whale's phone number? Did you text them or text her? "Hey, bro, I saw your order. It's a hedge, right?" No, you don't know that. You're just basing it off this information, saying, "Okay, someone is selling $2.3 million worth of the 5,000 puts, right? Because they maybe think that the FOMC is going to change something or whatever. It could be a hedge to their shorts, right?" So this is the first one I want to cover, and we'll just have to see how much volume gets carried over into open interest tomorrow. So this will be a big number. So if we see 3,000 out of the 4,000, that's a good sign. If there's 500 volume tomorrow out of the 4,300, that's not that good. Okay, so this is the first one. So SPX 500, you're gonna have to give me a second to type this. So SPX 5000 put being sold to open 7/8 EXP. What was it? 2.5 million I just said? 2.3 million. So they want SPX to go higher and higher, and they want to buy back this premium for a much lower price. That's how you make money on these. You have to buy it back to close the contract, right? You don't want to buy this if SPX goes lower and lower, lower. This will go higher and higher and higher. You have to buy this back at, let's say, 8 or 9 or 10, right? And you lost $500 per contract or whatever the size is. And then if the market goes higher and higher and higher, well, these premiums go lower and lower and lower. You close it out for cheaper, and that's how you profit. Okay, and then that's 5.51 average contract price. Okay. One that I want to also talk about is I believe we saw GE. So GE, this is a great example. A 265 call for July 11th expiration. the bid and ask was 0.58 to 0.93. This is wait, give me a second. This is elementary. You complain like your followers are children not wanting this. We know this. I'm just I'm literally just going over flow. I'm not trying to make a certain person content or anything. I'm literally just going over flow. I'm just gonna see what I like. If you don't like it, you can honestly leave. I'm not just gonna give my filters away. Like that's not the point of this. My point is to help you guys read the flow, understand the flow, and what I'm seeing in the market, right? Okay. And anyway, so these guys were buying around at this first order. Um, the bid and ask was 0.58 to 0.93. So it is a pretty wide spread. But the spot price was 1.11. So they were paying above the ask, 9,700 in size for a million in premium. So we'll pull this up, right? It looks really good. Okay. So at first they bought it at $1.13 million worth, average fill about 1.11. It hit a spike. So here's an example. Here's an example of whales not selling, right? They buy it at 1.11. It goes all the way. Sorry, maybe it hits a low of like 1.08. Goes all the way to 1.41. There's no signs of selling, right? So these whales have not taken any profits. This yellow line just shows the contract price throughout the day. And if you would see a massive red bar, that means they would get out of the contract. But no, this is just one pretty big buy order. Went to 1.4, and right now it's sitting around 1.17, right? But this is a very clean flow, right? All at the ask. They were paying above the ask when it was being purchased. So, and it's 12% out the money with less than a month to expiration, right? And GE, I don't think GE moves that I mean, actually, it's been on a pretty insane run. Let me get on the chart now. So after looking at the flow, right? You're like, okay, the flow looks good. Let's look at the chart, right? Because I know a lot of people just look at, 1 million in premium of flow and then be like, all right, I'm just going to buy it without even looking, right? So let's look at the chart. Ideally, it's below the 21, the 8, it's still above the 50 and way above the 200, but we don't even care about these, right? So there is this previous little gap area right here at 233.95, and I think that's a pretty good risk. If you want to have a stop, you can have a stop there depending on your risk management. You can kind of maybe say it's like a descending, I don't know, it's like a descending trend line if you want to break that. So again, that's a very good clean flow. I think if it breaks below 233.95, it may go to 228 and 224 to the 50 SMA or EMA. And you also have FOMC tomorrow. It's a short week. Quad Witch is on Friday. And then obviously every 5 minutes there is a headline on something with war or whatever the case may be. But if we're talking about flow, if I see this 12% out the money, over 2 million in premium, 18,800 of this size, right? You take it, right? So you look at your charts, you look at the flow, you take the trade. Now it's all up to the market. The market will do what it wants to do, okay? And this is where your emotions should just flush, right? Whatever happens, happens. If you lose on the trade, you lose on the trade. So be it. Not a big deal, okay? You win, you take your profits and move on. So with this trade, we want to see how much volume gets carried over into open interest the next day. Ideally, you want as much volume to carry over just to show conviction on the trade. If there's, let's say, 2,000 volume, then it's like, all right, well, this guy has no conviction, but if you're willing to risk, holding it, or if there's no really signs of selling, the next day, then why not hold it, right? It all depends on your risk. You don't pay attention to what the whale is doing. You pay attention to what you want to do with your account, because you have no idea who's buying this flow, right? So GE is notable. So the GE 265 calls for 711 EXP, 2.17 million, 1.16 average price. All right. I think a lot of you want to talk about that QQQ, right? This is what I call a complete lotto, right? A lotto flow trade. So today, there was 99,000 volume, 2.6 million premium for a QQQ 545 call that expires June 20th. Okay. That's a 3% move that expires in 2 days, right? Almost all at the ask, they're paying 26 cents per contract, right? Now, with, the OI, being carried over, ETFs are so liquid that like it's kind of hard to tell, if the whale has a lot of conviction or not, which I kind of ignore the ETF kind of OI unless it's like one opening new order. Depending on how the market will open tomorrow, I really want to see how much of this volume carries over. Because if you see like 80,000, 90,000 carry over, and you get some positive news of FOMC, you get a 2%, 3% move, this is a crazy bet. And it's only 26 cents. Like, if you want to just like throw in some money, like, why not? Right? Why not? So I would honestly consider this notable. Obviously, I don't know, the chances of this making money is probably low. But if there's over 99,000 volume of these, 2.6 million for 2 days out. That's the thing with ETF flow. If I see like what's QQQ at right now? Let's say 530. Let's round it up. 530. Let's say I see a 520 QQQ put for August expiration for 600K. That's not that notable, right? You have 2 months of expiration. You have only 500, 600K in premium for such a liquid stock, right? Or option. That's not telling me much. This is telling me something. Someone is, or not, let's say there's 2 million for that one order. Someone is betting $2 million for QQQ to go up 3% in the next 2 trading days. That tells me a lot more than if someone was paying 2 million on a 1% out the money move for QQQ to go by September, right? So just because it's, there's a high premium, like it really, you have to know how, the expiration, right? This guy has crazy conviction. So we'll see. We'll see. But again, I will write this down as notable. So 2.6 million premium, 0.26 average. All right, so now let's go. There was this alt one was kind of interesting, but not. Oscar was pretty good. So Oscar 16 calls for 718 expiration. The fills were kind of messy. I mean, you do get a lot of asks. I mean, a total of 15,000 in volume, 2.3 million in premium. So they bought towards the beginning of the day, and then they seem to add a lot more towards the end of the day. But half of these were at the bid as well. So I would say like 150K was sold here. But so I think it's like 2 million these Oscars. right? So this is pretty notable. I don't know. Oscar did gap up on some news. I don't know. This one, maybe hold off on this one. No, Fiji's a good one. Yeah, Fiji wasn't the cleanest. There's on this one. Yeah, so someone. Here, I'll show you. You see these green bars? It's ask, and they're buying more here. So at the ask, 1300, the ask, 1400, 800. So this is where you see. This is where you see they're adding. Right? This is the time throughout the day. Market opens, and throughout the day, there's more orders. Right? Okay. So VG is really interesting. It's a 41% out the money move. A 25 call for 815 expiration, 8,000 in volume, 4,000 in open interest. It seems like this wasn't the first order, and we can check that. If we do, this is kind of interesting. So in the last 14 days, they were actually selling around, what is this? Yeah, it's like 100K. Okay, maybe not. No, never mind. So yeah, 8,000 in volume, 4,300 open interest, kind of increasing, and then more volume was added today. It's a 41% out the money move by August, right? So this is clean. This is actually really clean. 2,700 at the ask, another 2,700. So it's like 400,000 probably in total premium. So there we go. And VG, I think this literally just like what is this? Monthly chart, weekly chart? Yeah, I mean, this just became public back in January. Listen, if it breaks this, 17.89, this really has a lot of room to run, right? This is on the weekly chart, and they're literally basically betting here. That's the whale, 25. So they're expecting another 40% move by August. So this is very clean. So if you a good trigger would be above this, pretty massive resistance back in February 10th. Hopefully it doesn't get rejected if you're in. But yeah, that VG is actually really, really interesting. So VG is another one. Give me 1 second. Yeah, MSTR. I mean, dude, is there value in this? All right, I don't know. This guy's. Yeah, it's gonna be recorded. And honestly, like guys, if you want to come in here and like just like hate on this, or it's just might as well just leave. Seriously, I think I can remove people anyway. Um, sorry. Okay. Literally unprepared for flow one. Okay, my bad, my guys. I'm just getting a little distracted. Um, what was I gonna do? Yeah, oh, VG. There we go. VGXP. And again, I don't really necessarily have to do this, but I decided to do it for you guys. So, anyway, so VG was around 450K in premium, 0.62 average or con. All right. So let's go to the next one. It's pretty notable. So these are all truly at the ask. One thing that I don't like is like these, like Apple 215 puts for 620 expiration. I think these are arbitrage trades, stock replacements. So you just ignore these. Like these type of trades, you just ignore. Intel had some weird flow. Um, 11% out the money move by next week expiration, 422,000. We got a big order of a 200K premium here at around 1 o'clock. And then you had some more ads towards the end of the day. So 422,000 in premium, 24,000 in volume for an 11% out the money move. I just cannot trust Intel flow. Intel is literally just something that it's a money burner. Light your money on fire. But again, you still want to note this flow, right? So because someone's still betting, or there's $400,000 worth of these calls betting on an 11% move. So yeah, Intel doesn't have the greatest history of, or the best hit rate in call flow, but you still want to note it, right? Because again, it could be one headline news, someone might know something, or this is just a simple bullish bet, right? So that's how I kind of like think about these type of trades. I hate trading Intel. I cannot stand that this. I think I've maybe won one trade out of like 6 on Intel. It's not worth it. I don't think it's worth it. But you can still get those news trades that come out, and that's basically the only way you make money off these things. So Intel, we'll write it. Intel 23 calls for 627 expiration, 422K in premium for only 17 cents average. How do we take advantage of leap options as small accounts like 510 Microsoft for January? So Microsoft, okay, so yeah, that's actually a good question. I could definitely cover. And I'm just gonna keep going through flow, and then at the end I'll answer all your guys' questions. Yeah, when you see like $40 million in premium in Microsoft like January calls, right? That doesn't mean you buy weeklies, right? That whale is not betting on Microsoft to move to 500 on Thursday or Friday, right? So if you have a small account, if you have margin, right? I think Robinhood you can do spreads. You can lower the cost by playing debit spreads, right? So it costs less than buying a naked call, right? That's one way to make it cheaper for a small account. So, but yeah, if you see these big leaps, right, or 6-month out expiration flow, that does not mean you buy weekly contracts, right? You don't want to do that. You shouldn't even be playing weekly contracts. You want to pay the premium to have time on your contracts, right? Because if it doesn't go your way on those weeklies, those contracts go down 30-40% very quickly. And yes, you can make a lot of money on the weeklies as well. But again, if you see this flow that's for January, February expiration, 20, 30 million, like ARM, for example. ARM was getting, 120 or what is it, 130 calls for 2027, right? Every single day there was like 2,000 in volume coming in. But people were about, and ARM wasn't actually moving that well. I think ARM even dipped down to like 124 or something. The people who bought those weeklies or 2-week out expiration trades, when this guy was buying 2027 calls, got killed, right? So cheap contracts don't mean that they're good, right? Cheap contracts are usually not that good because you're really fighting against data and delta and all that stuff. So if it's too expensive, you might have to what's it called? Just wait for the next trade or play a debit spread. You can buy a debit spread, right? It's less buying power. Okay. Let's go to the next trade. Yeah, Amazon 200 puts for 7/3 expiration, 12,400 in volume, 1.3 million in premium, July 3rd expiration. So we already said that 7% out the money. So this is clean, right? There's really no signs of bids. So almost all at the ask. They're betting on a 7% move by expiration. This is notable. But again, the thing with these like big caps like Tesla, Nvidia, Amazon, Google, Apple, like I'm not really interested anymore with like these type of flows. Like it's just because they're so liquid and it's just so annoying. Because there's a lot of premium in all these contracts. If this was $1 million premium in a stock that rarely gets options, that's way more important to me than Amazon. I just don't think like this truly doesn't excite me anymore. Maybe like 3 years ago, 2 years ago. I think if this was even a 200 put for like next week expiration for 1.3 million, that's way more notable for me than something that's 15 days out. MSTR too. Yeah, we can definitely put MSTR in the no trade list. MSTR call flow. Oh my, I don't know what is going on, but these guys every week are buying 1 million uh, plus worth in premium, and they just get nuked every single time. So yeah, it's I don't know. All right, give me 1 second. I gotta change something real quick. Okay. All right. I just had to do something. Yeah. So even though there's 1 million in the premium on Amazon's, I'm not that interested in it. Um, do I have a filter? Yeah, I do have a filter. Yeah. What else? Okay, let's. Yeah. So like during the day, this is all just like going up and down, up and down, up and down, up and down, right? It looks like this. Obviously, the market's close, so no orders are coming in, but it will look like this, and then I'll kind of just scan the market like by the premium, how much expiration, the percent out the money, um, and then I'll look into it and then see the chart and see if it does actually look good to enter. Um, yeah, ASTS they're buying some 50 calls, but yeah, this is like light, and it's these fills are like not good. Um, what else? Yeah, that G is crazy. I think the trade of the week was that FSLR. FSLR yesterday was just absolutely nuts. FSLR flow is so bad, but that one just okay. So this one right here, I'm gonna talk about like this like sus flow. Not really. It's not. This one's not really necessarily sus, but where is it? ARM. So ARM. This is what you kind of uh you know you don't really like the whales for. So someone bet $108,000 for ARM to move 14% by next week. All right. So that is, I consider a little sus, right? Someone's betting $100,000 for 627 expiration for a 14% out the money move. Most of the time, these are kind of just crazy bets. The premium is not that much, but I think I still consider it. It's an unusual trade, and I just say it's sus, right? Anything can happen. What some headline can just come out and this thing could rock. But this sus trade, right? You bought it at $1 and he's down over like 60%. And obviously, if you have ARM stock and you see, oh my God, someone's betting 140K for 14% of the move. That's kind of interesting. Any news? Any news that could happen? We don't know. I don't know. But it's very light premium and but if you want to consider that sus, then that's pretty sus to me. Okay, let's find another one. Nvidia again, like one. So this is not that bad. Yeah, we talked about the QQQ 545 call. That is like definition of stupidity of sus. Like I don't know what's the thesis behind this guy. Good news from FOMC. Uh, Again, Nvidia, you have 4 million in call and premium at the 146 calls for a 1% out the money move. This doesn't really excite me, right? It's just such a high liquid contract. It's like I will note it, I will post it. Um, but again, I want to see these type of premiums in stocks that don't really show that much options contracts, right? But this is clean. This is clean. This is bought all at the ask for 3 million in premium, right? They're expecting it to go to one as close as possible to 146 and higher by expiration, right? But again, not my doesn't really excite me that much. And let me show you an example of a whale buying at the absolute top. So Reddit today was what? At open, went up to 146, right? These guys buy calls right at the open. Like they bought it right at open. Didn't even wait for like a tiny pullback. So they paid around $2 a contract. It went up as high as 5.59. No signs of selling. And those contracts right now at a low of like point 0.9. Okay. 99% of the time, these whales are crazy. They buy calls at the top and they buy puts at the lows. It's very common. You see it all the time. So when you see, some whales buying, 500K worth, 100 for 300,000, 400,000, you can note it, but that doesn't mean you enter it right away. Pull up your chart, see if it makes sense, right? The reason why I post these trades, right, is because it's just data. I just want people to see it. But you always want to double check with your charts, right? Unless it's such a cheap lot and you're willing to just, throw away some money, then okay, whatever. That's not a big deal. Um, but apparently, I mean, this is a 29% multi-leg now, so there is maybe another side to this trade, but let's just say it's not. Um, looks like they added another ads like light, so it's meaningless. 51,000 in premium. That's not that much. But yeah, you always want to double check with your charts. You don't want to. Yeah, exactly, exactly. This position is trade around. Whales could be very, very dumb. Okay, let's go to a different filter. We can do bid side filters. See if there's anything on the bid that looks interesting. So when you see these like HD 380 puts sold to open for 620, this is an arbitrage trade. You ignore these. This is arbitrage stock replacement. Crowd. This is interesting. So someone is, yeah, that's who. Crowd is selling a 560 call for 919 expiration for 2.9 million in premium. We just want to make sure that this is not closing. Yeah, so this is a new order. So they are thinking that Crowd is not going to get to 560 by expiration. Okay, so this is a $2.9 million order, bearish bet, right? This is pretty notable, but I mean, September expirations, whatever. I kind of want to see a closer one. I feel like today was like not that like it was. Okay, and this is the definition of messy flow. This is like the worst thing that you can see, right? There's a lot of asks, there's a lot of bids, a lot of mids, some sells. This is literally just messy. I'm guessing here if I had to pick, like I like this is not something I would post, right? I don't really know what's going on here. There's a lot of things going on here, right? What I'm guessing, if I had to, talk about this, is that yeah, this is like such small orders that they probably sold a my trip only 59K. Okay, yeah, no, let's just ignore this. This is just all a mess. So you ignore this. If you see this on your flow, if your use flow, ignore. It's not clean compared to the other ones that we've seen. Any hood flow? Yeah, I actually there was another. Today's the 17th. Yeah. Okay. Yeah, this one. So someone was selling Hood 76 puts for 1.3 million in premium. So they're betting that Hood is going to be above 76 or higher by expiration. So they're selling it at around 3.2 a contract, and right now they're underwater, right? So it's at 4.41. So in order to close this out, they have to buy it back. If they buy it back for 4.41, that's a loss, right? Their goal, actually, no, they're not underwater. They're actually, it's like almost breaking. Yeah, barely down. They're down like 25 cents a contract. So this is like the most notable flow, and this is like the second time. This is yesterday there was some put selling on Hood as well. So, but this one is notable. So Hood 76 puts being sold to open for 627 expiration, 1.34 million, and then 3.2 average cost. When is the multi percentage significant? When it's above 20-25%, I would say, like, or like maybe 15%, 20%, I would say it's significant because it may not be a multi leg trade, but there is a chance, and you have to see if there's another side to the trade. So anytime it's like 15% and above, um, it's not like necessarily a single leg trade. Um, okay, and then also, why does the chart look like that? The chart on the left or chart on the right? This is just net premium, right? So net put premium. This is the yellow is the stock price, and the net call premium on this side, and then this is just the bid and the ask. Left, yeah. This is the contract. This is the contract, and then the yellow is the contract price, and this is the details of this specific contract. So Hood on the chart, yeah. I'm gonna get your guys' questions uh, real quick. I'm gonna do two more. Oh, I'm already on Hood. I'm stupid. Yeah, I mean Hood is like it's riding above the 8 this whole time. It's just bullish until that 8 breaks. That 8 breaks, then yeah, it'll probably go to you got that first support at 71, then maybe to 69. But yeah, it's been Hood has been just riding along the AMA uh, very nicely, very nicely. So that whale is betting that Hood is going to be above 76 by expiration. Okay, over a million in premium. We'll do some flow requests too. So let me do two more. And these are multi-leg trades. Actually, okay, now that we're on the multi-leg trade, I will speak to a bull risk reversal, bear risk reversal. If I can find one. This one maybe. Okay. This one's not that clean. I want to find you guys a bear risk or bull risk reversal. So these are all multi-leg trades. These are not single leg trades. Um, this is just a clean debit. Oh, nope. Never mind. Let me see if I can find one here. No, I don't have any on me. Okay. So bull and bear risk reversal is basically saying, I'm just going to show you this. Let's just pretend that, let's ignore this one. And then let's just pretend these are, this is just one set of orders. So a bear risk reversal is literally you're buying puts, right? And you're selling the calls with the same expiration and the same size, right? So you're buying puts and you're selling calls. So that is a very bearish trade, right? I mean, this one's very small, but like I'm just using this as an example. So you're selling the calls thinking that APLD is not going to get anywhere near 12 and a half, and you're also buying puts. You're betting that the stock is going to go to 9.5 and lower, right? And then bull risk reversal is the opposite, right? You're buying calls and you're selling puts for the same size, for the same expiration, right? So those are uh, very bullish or very bearish strategies. So I really like those ones, right? Because you're basically doing double the risk, right? You're buying puts and you're also selling calls at the same time. You're buying calls and you're selling puts at the same time. EL, yeah, EL had one a long time ago, and I think that worked well. There was one CG worked really well, um, but yeah. U, I mean, I don't know, a lot of you guys are talking about U. There's a U put seller, 23 for June of next year, but it's only 314,000, only 500 volume. Um, this is not that notable, right? It's not much premium. Um, this GIII. Okay, so this is actually a example I can show you. So they were selling these 20 puts for December of 19, and they sold some more for, let's say, 280,000, and then they started to buy back some, right? Almost basically, they barely made any money on this. Yeah, so they bought back some of these green bars, so they're starting to close some of these. But again, this is not that clean. It was actually clean in the beginning of this morning, but they just closed some out. RGTI, I can show you RGTI. Um, this is the good thing about whales is that there's a contract lookup page that you can literally search up any contract that you want. It was the 32 calls, right? So if you go on the 2-day, so there's around 1,500 in volume today. There's still 4,600. So 4,600 out of the 55 21 carried over. So tomorrow we'll see how much of the volume carried over into the next day. All right, so this is RGT. I think they bought at 0.99. It hit 1.12. No signs of real any selling. Some orders here and there, but nothing significant. Looks like the whale is basically still in this trade. Okay, let me find one more, and then I want to start answering you guys' questions. Seems like you guys have a lot of questions. Um, this ALT, yeah, ALT's it's only 2% of the money. Not a good example. Yeah, like REAL would be kind of like a consider like a sus flow. Like someone's paying $60,000 for a 45% out the money move for November expiration. I don't really know how much real moves. Um, but I mean, hey, someone's paying 60K for 45% out the money move. It's pretty interesting. Um, Come on, what else? SMLR, someone's paying yeah, this is actually notable. 884 volume today. Someone's paying 332,000 for 110% out the money move for January. Yeah, we'll note this one. So SMLR 60 call for January expiration. Not that much premium, but still it's not bad. So 332K in premium for 110% out the money move, which is actually kind of crazy. I mean, the stock right now is at 28. They're betting that it's going to be close to 60 by January. Okay. Let's run through a filter, and I'm going to tell you guys the best way to do these filters. Let me just do this, and then we'll just create this. All right. So I do have a lot of filters open, and it really depends on what you want, right? Do you want just bid? You never want mid. I don't like mid. It's a waste. And you don't want no side. So do you want just bid and ask, basically, right? And then as you're going down through the filter, right, this is basically saying how much of his contract was filled at the ask, right? So you can see here, this is like 34,000 at the ask, 31,000 at the bid. So that's definitely not, let's say if you want 90% at the ask, that's not 90%, right? So if you wanted to do contracts that are almost all at the ask at once, let's say you want to put 0.9 for this filter, right? They're almost all at, oh, I don't know what the hell I just did. Can you guys see my screen still? I don't know what I just did. Okay, I think we're good. I think we're good. So anyway, I will leave this blank. I'm just going to leave it blank. But if I wanted to create a good filter for you guys, this is what I would do. So I would like to have it at 0.9, right? I want almost all of the ask, right? Bid, don't need to worry about. I want calls and puts for this filter, right? I want to see everything, the calls and puts. And for this filter, I want to see the stocks, okay? And I don't want ETFs. I don't want indices. ADRs I'll keep. ADR is China. And then expiration dates, we're just going to leave that blank. And then for premium, for this one, let's just start with, let's say, 50,000 minimum premium. Okay, so it filters out anything below 50,000 in premium. Okay. Size, you can just do, 200, right? That's just the size of the contract that was filled. We can just do 200. Spot price, we don't touch. DTE, it really depends on what your goal is for this flow, right? Do you want this flow to be short dated flow? So like either 1 DTE to 7 DTE, like weekly contracts, or do you not care? Like you want everything from 20 to 2027? It really depends on the type of flow that you want, right? Like this is like my filters truly change every week. I just want to, see different things, right? Filtering out one thing and then adding another thing, right? So they change. I don't really have set filters. Depending on how the market is, I want to see, okay, let's focus on, big orders of 2 week out premiums. So we'll just do 0 to 14 days, right? And so that will filter out all the flow from 0 to 14. Okay, so these are 2 week contracts out for 50,000 in minimum premium. Okay, and then volume, we just leave it the same, just 0. We don't touch that. Open interest, we don't touch. We don't really touch any of these things. You can do percent out the money, right? So let's say your filter is, hey, I want $100,000 in flow with like a 30% out the money. right? Because someone is betting a minimum of $100,000 for a 30% out the money move, right? So this you can change from 0 to 1. You don't touch these. You definitely don't touch these. A sweep you can keep. Cross. If you want to keep it clean, you can just hide those. Floor trade is basically literally saying someone is placing the trade on the floor. Doesn't mean that they're always right, but that's literally what it means. Um, and then normal, we just keep the same. China on volatility, we can keep on, and no dividend because people will just buy these options and for weeklies and just because of the dividend. Volume greater than OI. You always want to have volume greater than OI to show how much conviction there is in the trade. Size over OI. But the one thing, again, I'm going to say this again, always want to see how much volume carries over into the next day. Okay, so don't forget that. But on the beginning, to all these opening trades, we want to see the volume be greater than open interest. We don't need to touch these. Size greater than OI, it doesn't really matter. Opening trades, you can leave on, you can leave off. Not that important. Exclude deep in the money. This is why I was saying that, I don't really care if someone's paying 2 million for an Apple 150 call for August, right? That doesn't tell me much conviction. I would rather see someone buy 2 million for an Apple 220 call for 2 weeks out, right? So there's nothing wrong with it, but it's just a lot of noise. Okay, I like to keep it out. So I like to have out the money only. If you want to focus on single trades or single leg trades, you obviously don't want multi legs on, right? So these are just single leg, no debit spreads, credit spreads, etc. Right? If you just want multi leg, then you can turn this on. So single leg only. And then today's trades only. These are the trades that are placed today. Pretty self-explanatory, right? Aggregated trades, what it will do, it will literally just put all the orders into one, and it would just put it into one right here, right? So it will, instead of having, like basically 10,000 orders of or 5,000 orders of Intel on your screen, it will just put everything into one. That's why it's highlighted. And then, yeah, that's really it for like a filter. I mean, it's very self-explanatory. It's like you have to figure out what you want, right? So I have filters of ETFs of 450,000 plus, and this with really no expiration, right? And it's a multi-leg, right? I have, and again, these change. I have a 0 DTE ETF with 100K premium minimum, right? So someone's betting 100K for 0 DTE, right? And so you see that there's really not that much today. So what I'll do tomorrow, okay, maybe I'll change it to 50K, 60K, right? But with my parameters, a volume greater than OI, et cetera, et cetera, et cetera. I'll have 7 days till expiration, 100K minimum on just stocks at the ask, right? So when you make your filters, you kind of just want to ask yourself, all right, so what do I want to look at, right? What trades do I think have the most conviction, right? So these change like every single day. I will change the 0 DTE from 0 to 90 to maybe 0 to 45, 0 to 26, 25, whatever, right? And I mean, here, like this was the filter, the 545 calls, right? Someone first paid 21,000 in size, 564K. Right after, they put another 14,000 in size, 383K. And this is what kind of lit my eyes up. I was like, oh god, all right. So someone's betting some crazy move, right? And as you start to look at flow more and more often, it's like muscle memory. Like things just start to catch your eye much faster than usual. But yeah, as far as filters, it's truly pretty self-explanatory, and they do change almost every day. I mean, for me, basically. Okay, I know there's so much in the chat that I'd probably skip through all your questions. Um, let's just start now. I know you might have to type your questions again, but we'll do questions for like 15, 20 minutes. Then I gotta eat dinner. We can do flow requests. We can do any like just give me a ticker and we can run through it. TTD. Okay. Oh yeah. Can you talk about when unusual whales is wrong? It's actually not the ask or bid. Um, I've seen you do this once. Um, okay, wait. All right. Let's get like three requests and then we'll stop for a second so we don't like lose the questions. Yeah, it's not that necessarily they're wrong. So like the thing is, oh God. The thing is, these tags where it says like bearish, bullish, ask, you kind of really want to uh, ignore these, right? Because sometimes, like, just because it's at, you know, the ask on these puts doesn't necessarily mean it's bearish or vice versa, right? And that comes along with the spreads. If the spreads are wide, if it's like a point, this is not gonna be a good example. If it's I want to find a good one. Okay, VTYX spreads at point 0.6. Nope, not. Yeah, okay, here. Oh no, this is actually good. Fuck. Give me one with the wide spread. Okay, regardless. If the spread is wide, right? Spread is wide, zero point 0.5 to 1.3, and the fill was at 0.75. This will say bullish, and this will say at the ask, right? That's not necessarily at the ask, right? So you have to actually go into this contract, click this, and look at the fills, right? I don't know why my IV is not here. So IV is basically staying the same. They're buying calls, and the price is stagnant. It's not really going up. It's not going down. And the fill prices are so you're leaning ask on these, right? But whenever there's wide spreads, these tags sometimes get a little sketchy, right? You can't necessarily rely on it, right? And sometimes, um, let's say for that SPY, I don't know which SPY one you're talking about, but if there's an ask order like this, where is it? Like this, and then let's say 2 minutes later I check and it's just like a fat red line, like in the middle. That means they probably got out. That's when I'll be like, okay, well that's definitely uh, that they definitely sold that. Okay, all right. ASML. Wait. No, I missed it. Let's do TTD. Okay, so TTD. That's not going to be a good watch list to check. We can do. Yeah, so TTD 72.5 put. Oh wait, no, this is not even today. This is 6-4. Yeah, so there's really nothing on TTD. So if I do TTD on like a very basic filter, this is all it's got for today. They're selling a 50 put for 66K. There's really nothing. So when I see this, that means there's really nothing on TTD today, right? There's really nothing. ASML, nothing on ASML. FSLR, there was those like 150 calls today. With a lot of premium. I mean, bro, like they're basically just uh, betting on a dead cat bounce. They were buying it heavily, 1.3 mil, 1 mil, uh, like let's say 2 million during the day. They sold some here for actually some profits, around 660K worth. Um, but and then they start some small ads towards the end of the day. So 6,000 in volume total. We'll have to see how much volume carries over into open interest. Again, FSLR is just like what was it, down 23% today? These guys are just betting on a dead cat bounce. Let me get through FSR gold or SLV. So yeah, I think the gold actually had. So gold had a 314 call for July 2nd, 415 spot price. So they bought it at the ask for 1,000 in size towards the end of the day. So you can kind of necessarily call it. You can call this like a buzzer beater, right? So someone paid $429,000 worth of calls at literally 5 minutes before market closed, right? So this is clean. This is a clean gold flow. SPY, I mean, bro, I can show you SPY flow for. God, where is it? Like this is what I mean that it's a mess. I mean, you got 600 calls, you have some 592 puts. Like this is really messy. 17% multi-leg. This is where it kind of gets tricky. 66% multi-leg. There's another side to that trade. 586 put, 10% multi-leg. It's a mess, really. Nothing that really stands out that much. 23% multi-leg. So what I would do is just go to like my multi-leg ETF filter. And you see 569. This is kind of a short. Yeah, these guys are like selling these puts. 570. No, same thing. Yeah, SPY flow is just a mess. I think the only the truly the notable ETF flow today was the put sellers, these 5,000 puts for 2.3 mil, and then that crazy QQQ. Where is it? $545 call right here. It's crazy. MU. Let's see if there's anything on this filter. Yeah, 125 put. Now see, this is like an in the money put. I was open in the morning. Did pretty well. 3.34. Went to 5.2 actually. So this is actually a pretty good trade. But that's about it on MU today. As far as the ask side, and if you do bid, today's the 17th. Yeah, this is actually good. This is actually really good. So someone is selling the 100 puts for 815 expiration. And again, these are newly open trades, meaning that it's not that someone bought MU 100 puts like 5 days ago and now they're selling their contracts to close the contract. These are opening trades for today. So this is actually a good new trade. So MU 100 puts being sold to open for 815 expiration for 1.77 million. This is a bullish trade. Did you to get some QQQ? Yeah, I had to. That flow is it's just stupid not to take. Like it's cheap. It's 26 cents a contract. Like if you guys were here during that tariff stuff, when that SPY 510 call or whatever, something like that, it was like over a mil. Thing went like 1,000%. Obviously, I don't think that's gonna happen for this QQQ, but it's that flow is just so stupid, like not to take as like a cheap lotto, you know. So yeah, MU this is a good order, a very bullish position. That was the price was 2.55 average. So if you get backed on QQQ, it is what it is. How do you know it's open? So the trades that or the filter that I have, you can set the filter for opening trades and today's trades. Should I buy the QQ call tomorrow? I mean, I'm not gonna tell you guys what to do, what not to do. It's just if you want, go ahead. When you guys post those QQ spikes, yeah, it's kind of uh, you're kind of just seeing just more activity in the SPY calls and the SPY puts. I think this one was actually pretty interesting. The QQQ 515 630 puts, 3% out the money move for 4.87 million in premium. This is basically like a hedge to the downside. You can say it like that. So it's noisy, right? You have that 2 mil for 2 days out, and you have 4.8 mil for 12 days out. I like the two day out one more because first of all, QQQ has to move 3% in 2 days. Been that basically one day now, right? They're betting 2 mil. This guy has still 12 days for a 3% move, paying 4.8 million, right? But both are notable. Both are notable. But as far as the spikes, what was it? It was let me see. Oh, SPY bear put spike. This was the SPY 600 put. Yeah, so like there was really not much activity here, right? There was a buy order, then they sold, right? And then you see a nice big order that came in for 943,000. Started to take profits. So this was what, 1,500 at the ask, and they bought at 6.26. They sold 1,000 of them at 7.02, and they started to buy a little more and then sell a little more for profits. So this was actually a pretty good trade. But yeah, that's what I mean by like a spike, right? A little bit of activity in the morning, kind of dead in this contract, and then you see an order that comes in again for the same contract. That makes sense. Um, how long did you take to become confident reading flow? I mean, it's been over 3 years since I've been using flow. I've been trading options for a while, but like as far as like really using flow, it's been what was it 4 years. Um, and I mean, I learn something new every day. Like I'm not gonna say I'm the top flow reader or flow trader, this and that. I learn something new every single day. I still make mistakes, but it truly comes at a time where you look at it and it's like muscle memory. Like it just comes to you because you see so many orders at once and the different types of orders and how they move and how when you track them, it kind of becomes like I don't know. It just gets easier through time, and that's just like how trading is. I mean, trading never gets easier. Uh, I feel like your emotions just get better, and your charting skills get better with this and that. But um, the more screen time, the better it gets, in my opinion. It's trial and error. Hymns, yeah, I did see some hymns calls. Wasn't too big. Say 17th. Yeah, so someone was nice 390,000 in the 66 calls, 11% out the money move for 390,000, 3,000 in size. So we saw that first order at 100 was 112,000, and then you see some more ads towards the end of the day. It's around 1.23 a contract. I mean, hymns honestly, like on the daily, it's trying. It's really trying. I mean, it broke out, but just gonna see how much continuation there really is. But 11% out the move, and Hims can squeeze, right? You have a good day on the market, then Hims can really go. Um, Core weave, and yeah, again, just because there's a lot of premium in this contract does not mean the whale is gonna be right. Okay, it really does not mean that. You have to like use your own judgment too, your own charting, etc. Yeah, it's not that much. Hims. Core weave, I mean, fuck. Core weave. It's just absolutely nuts. Corey's just flow is just a mess. You have put sellers, you have put buyers, you have call buyers, you have call sellers. This is what I call just messy flow. There really wasn't anything that clean on my end to see. I mean, you can go into it and you can, I mean, yeah, it's 200 calls, 17,000 volume in these, 2.2 million. I mean, bro, this thing's a train. But yeah, today there really wasn't. Oops, I did not want to do that. Anyway, there wasn't really nothing crazy in these. Um, but yeah, Corby is honestly just nuts. It's really nuts. This is pretty messy, but it's wild. Um, what do you look for in IV move of the flow? So that's when the spreads are wide, right? So when the spreads are wide and you can't really determine uh, if they're actually at the ask or at the bid, then you have to open up the trade and see all the orders and see if the IV is increasing. So the IV is starting to decrease. That basically means it's at the bid. If the IV starts to increase as the orders get filled, that means it's getting towards the ask. So that's when you want to look at the IV. What do you check to confirm STO puts, STO calls? So if the spread is at, let's say, 1.5 and 2, and the contract gets filled at 1.5, that is STO, right? On a new trade. STC is the same thing. STC get filled at the bid to sell your contracts. Okay, I think fun. Yeah, I can check that. Yeah, fun 30 calls today at open. Um, Whale bought it 382,000 in premium, 1,200 in size, 405K. It's 2% out the money move. It's a clean trade. I mean, it's all at the ask. Um, they're a little bit down right now, 2.75 because they're filled at 3.12. But I mean, like the chart is, I don't know what. Wait, fuck. Betting that's gonna bounce. I don't know. Maybe you get a 28 first. I don't know. Chart. Like the chart looks like this, and someone's just betting. Just betting a bounce play, really, below all the moving averages. Yeah, I'm cooked. Sounds like he's my age. Age doesn't matter. And honestly, if you are trading in this market, like give yourself a pat on the back. This is not like an easy market. If someone, there's a lot of volatility, which is good. It makes it fun, right? But this is not an easy market. Your setups could look good. The flow could look good. You get one notification from news, and it just flips everything, right? Because you can't control that. You truly cannot control that. You can't really blame others, for let's say, posting a trade or whatever, and it goes red, right? This market is tough. It's tough, and so as I said in the beginning, base hits really, you know, are, really do the job. Okay, you don't want to go for those. I mean, you can, but like, I feel like this market right now, it's not like, hey, I'm gonna hold for 100%, 200% uh, gains. See profits, take profits. Is the flow MTG that start? I'm not sure what that means. 8 p.m. I'm not sure what that means. Yeah, we've been on. I appreciate that message. Um, any other? Yeah, come on. I can do like 10 more minutes of like questions. You guys need help. I hope this helped. I'm kind of down to do this every week. If you guys really want me to like go over flow, some contracts, I'm down to do this every week for you guys. I just want to know if it truly helps or if I'm just gonna get like hate like that one guy. CoreWeave, he just went over it. It's a mess. There's like 200 calls for June 27th, but it really wasn't that. Uh, it's just it's just all over the place. Yeah, I just want to make sure it's like it's helpful. If I missed anything, if I said anything that wasn't right, like correct me. I'm always, I don't really do streaming this much. I'm not that experienced in talking and to a crowd really. So hopefully I don't sound like an idiot. I mean, your circle's the same. Like you have these circle IPO type stocks that are so sporadic, uh, and the movement is just so crazy. The flow is just gets messier and messier and messier, right? So someone like bet, like this is actually pretty clean. They bet 1.74 million in Circle 150 puts, right? And it's at 19.6. It went up all the way to 24. But again, these whales for some reason they don't sell. There's no signs of selling here, right? You don't see these big red bars. They're still holding, right? I don't know what what their plan is, uh, but but again, yeah, that's probably the only clean order I that caught my eye on Circle. I mean, there's what are these? Some call sellers at the bid, 240 call sellers. Avgo, and then yeah, PayPal yesterday had some. Okay, so Avgo 200 puts for 11/21 expiration. These are opening trades at the ask. 200 puts. These might be sold to open, I feel like. But again, I'm not exactly. I gotta see this IV tomorrow. I gotta see how much IV gets into or open interest gets into this tomorrow. IV went up. I mean, this could, but the stock price stayed the same. Fill price went higher. This is actually could be at the ask. Um, yeah, Oscar. Yeah, we talked about Oscar. I just looked at Hims. Hims had those 66 calls. So yeah, so Oscar today had 16 calls. They actually did have 22 puts, or sorry, 22 calls sold to open as well. It's not related to the 16 calls, so it's not a debit spread. The way you would know if it's a debit spread is that there's like an arrow up and down. So it look like this. Uh, Deb Deborah, yeah, this is the class, or this is like the stream. It's recorded too, so like you guys can watch the recording. I don't know who wants to hear my voice again, but like it'll be there. Um, isn't it better to take a lower strike? Well, depends. Really depends. PayPal, yeah, we gotta see how much. What is this? What was it? The set 70 calls? These 97K. I forgot the pay. Oh my God! Wait. I have it. I have it. They were in the money calls for 8:15 expiration. So this is how we can check. Yesterday they hit these 8:15, 70 calls. So on 613, there was 8,000 in volume, 7,000 increase in OI, so 7,600 carried over. And today there was some that were shaved, or this morning some were shaved off. There was only 120 volume, but if you look at yeah, I mean, it looks like most are still in. There was some sells here, but it looks like most are still in. So, okay, I've covered the selling the call and buying the call. Like, I'll show you really quickly one more time, but like, I think we've covered this. So this is selling a call at the bid. These red bars are bid, right? Opening trades at the bid. That's selling a call. And then, that's not a good example. And these are buying calls, where the green bars are at the ask. I personally don't necessarily use net call premium, net put premium. I feel like you don't necessarily know if the net, like the puts are being sold or if the calls are being sold. I kind of ignore the put premium stuff. Uh, but I do feel like if the net put premium decreases, that means the yeah, I don't know. Yeah, net put premium stuff on the side of the flow. I truly uh, ignore that. I ignore that. So RGTI, those 32 calls, yeah, if you want to get a closer strike delta, right, a higher delta, then yes. Like, but I just did like, for those type of trades, you don't really want to pay like that premium for like kind of like a, I don't know, a lotto trade type thing. You kind of just want to follow the flow on that one. But again, there's nothing wrong with buying a closer strike to the underlying. There's nothing wrong with that, right? But I mean, if you're not really want to pay the premium, then you kind of just take those like crazy strikes out with the flow I showed. UNH, I don't think there was anything on UNH. Yeah, not like nothing. I can go on like, yeah, really nothing. Nothing wrong with buying shares either. There's nothing wrong with buying shares if it just depends on how much you want to put in. If you want to just play the options for a short-term trade, or if you want to, buy shares, it just depends on your kind of strategy. How often do you do these live or do these videos? I mean, like in the Discord, I'm live every day. Like I'm doing this basically, but when the flow is live. But these like review type things, I've only done it a couple times, and so I'm planning on doing it once a week. How you decide when you tail the whales? Um, Again, it depends on the premium, the percent out the money, the expiration for me, um, and that kind of comes with screen time. It kind of just like, I don't know, when I look at it, I get that feeling. Okay, this looks good, and then I'll go my chart. If the chart makes sense on like the longer time frame, depending on the contract. Uh, that's when I know I will enter the trade. If everything matches up, if the the market is looking either strong or weak, depending on the trade, that's when I'll enter. So Marvel 6. I'll answer one more question and then we'll probably end it for tonight. 620.72. Am I tripping? Is this not working? Okay, so yeah, look, oops. Yeah, it looks like, so they bought these 413,000, 5,000 at the ask on June 16th, yesterday, And looks like they got out. Uh, wow, what a trade. Jesus. 0.78. Looks like they sold 0.78 to 1.49. That's a great trade. Good job to the Marvel wheel. And they actually sold for profits. Uh, all right, guys. Well, I think I'm going to end it on that. Nice. That was like, what, 90 minutes? That was good. Hour and a half. I appreciate you guys all sticking around. Appreciate you guys being patient with me. Again, I haven't done this really at all. So I might have a lot of errors, but thank you for sticking with me. And we'll just do this every week, I feel like. Oh, okay, let me answer this last question. How should we approach trader calls when the trader makes a bet and the average moves away from you, Geo at 91 cents, but the bid just I'd probably just wait to yeah, this is gonna be posted. This is gonna be posted on YouTube. The recording will uh should be posted on YouTube. I'll make sure once it's done, I'll tweet it out, put it in the Discord, everything. Um, any giveaway on Discord? Uh, Maybe I'll do one. I don't know. I'll see. I'll see. But anyway, all right, guys. Thank you. Thank you.